Well, last day of the trading week, and it does seem like we're going to end at least with a bit of a green because we have been holding on to the morning gains quite smartly. So we are close to the levels of 24,350 right now. It's the PSU banking index, which is up a solid 2% right now, leading the gains at the moment. You also have auto as well as the IT index that's doing quite well in the trading session. Of course, the gains have been led by the likes of Eicher Motors, etc. And that is something that will come up for you on the screen as well. So good earnings reaction coming in for Trent. That one was up a solid 10%. I mean, valuations are way above the 100x mark as far as Trent is concerned, but it keeps on delivering good set of numbers and the stock continues to trend higher. Eicher Motor reported a good margin beat in FOH, wherein there are trends which are pointing to a bit of an improvement in billings. So all of that is getting factored in. There are other big buzzers from the broader markets as well. Bharat Rasayan, for instance, is locked in upper circuit right now. KFin Technologies for the third day is doing quite well in the trading session. And NBCC, which bagged that big order win of 15,000 odd crores, is reacting positively. What's not doing well and has been under pressure for the last few days is the likes of Apollo Tyres. A big miss on the margin as well as the peer comparison suggests that it's going to be a bit of a weakness there. Alembic Pharma, SAIL, which reported a weak set of numbers, all of that are actually in the red right now. But other than that, the market mood seems a lot more buoyant today, Aisha.
Oh yeah, absolutely. We're holding up well, got a good leg up from the global cues as well earlier this morning. And in tandem with that, we've been looking pretty good. So good 268 points up in the green, where in fact we've made it to that 24,400 print in the Nifty futures. I mean, just to think of it, how the world can turn upside down from where we started off the week on Monday, that massive meltdown that happened on global equities. And since then, the kind of recovery that we've seen. But yes, Trent, Eicher Motors, Canara Bank, MCX, these are your star performers this afternoon. But back to number crunching.
Oh, well, yes, number crunching, and why not welcome the management of InfoEdge to discuss just that. Chintan Thakkar, the whole-time director and CFO at InfoEdge, joins us on the show right now. Hi, Chintan. Good to be speaking with you. There's a bit of an improvement that we're witnessing in the number, especially as far as the Naukri is concerned, almost 6% growth on a YY basis, and the billings jumped by almost 9%. Talk to me about what was the volume growth like, what was the realization growth, and going forward, what's the expectation with respect to the Naukri billings?
Yeah. So if you look at the billing, which is a lead indicator, and if you also look at what happened in Q4, it looks like that we have kind of we are at the bottom of the U curve, and probably we have started growing up. So it's quite likely that we are bottomed out, although we are still waiting for the higher recovery. But there is some amount of recovery that we are seeing it, and there is an increase both in volume as well as realization. That's also a kind of an encouraging news. Non-IT segment has been kind of doing much better than what the IT segment seems to be doing. But also the other good news is that the consultant also have now started showing some amount of recovery, which wasn't the case in the last quarter. So there are a lot of encouraging sign, which kind of makes us believe that maybe I think this is that we have bottomed out, and maybe we should start showing a better recovery going forward.
Chintan, hi, afternoon. Curious to know what's happening with 99 acres, because a clear disconnect from the industry that it represents and what's happening thereof. Muted growth clearly continues. I mean, when is it that we can expect a turnaround, and a material one at that?
Yeah, I think you need to just not look at what the top line growth is, which I think if you look at last year, all the 4 quarters were kind of a high growth. This quarter is little subdued, but it's also far more profitable growth. So it's far more efficient growth. So if you look at the overall cash burn, that has significantly come down. And that's not only for 99 acres, that's true for some of the other non-recruitment businesses as well, that we are sticking to the theme of growing more efficiently, more profitably. And that's what this quarter seems to be showing.
Profitable growth, that's been something that you guys have been tracking. But what about Jeevan Saathi? It's nearing break-even. Should we expect it as soon as next quarter, perhaps?
Yeah, well, fingers crossed. Again, as I said, that look, we are growing and we want to grow efficiently. So that business also shows that yes, we are closer to the break-even. Overall, all the non-recruitment business taken together, the cash burn has come down almost like 73% from 61 crore to about 17 crore. So that has been one of the highlights of our quarterly results.
And what about the A&P spends? Because that seems to be weighing on your margins. Is there any plan to ease that out, or do you think that spend quota will continue as is in the future as well?
Well, I think AMP spend again in non-recruitment businesses have overall come down, again because of Jeevan Sathi's, AMP spends have come down. In Q1, in recruitment business, in Naukri business, we had, some of the advertisement that happened during the IPL times. And I think that has, kind of resulted in slight higher kind of, AMP cost in the overall bucket.
Taken on that, but just coming back to the recruitment business a bit, what led the growth this time around? Because segments like healthcare, hospitality, etc., were picking up. Is that the vertical that continues to do well? And what about IT? Is there any growth that we should perhaps expect from Q2 onwards?
Yeah. So in general, as I said, that non-IT has been doing much better, right? Consultant growth has just begun. IT was, I would say that it was around, let's say, mid single digit type of growth. Non-IT was kind of growing at mid-teen type of growth. So IT is, has started now growing. Last Q4 also, last year also, we have shown some growth. This year also, this quarter also, there's some growth. So there are some encouraging signs over there, but it isn't like what it used to be. So we are hoping that the recovery would be much stronger in the coming quarters.
Good to have you on the show. Thank you so much for taking the time out and joining in.
Thank you so much. It's my pleasure.
Right. Well, let's move back then to the star performers this afternoon, and that's clearly Trent. That's the one which has been holding high, and what fabulous number as well that's come in from Trent for the quarter gone by, 61.51 on the stock right now. Let me take it across to Ginny and find out what the numbers were like and whether this kind of growth is actually going to continue at this kind of pace. Also for the stock price, Ginny?
Well, yes, absolutely strong set of numbers. If you look at revenues, it's seeing an uptick of about 50%, net profit up around 131%. Also very strong performance in terms of operating leverage. Now, if you look at the overall scorecard, what the other market guests or street was expecting, the revenue, EBITDA and PAT comes up above the expectations, whereas with inline margins. Also, company had to say some commentary in which they said that the overall market sentiment right now remains subdued because of the increased competition also, but they will going forward continue their ramp up position and expansion plans to deepen their store presence. Also, in terms of other highlights, if you look at the store openings, company opened about 25 stores, out of which 6 were for Zudio and 16 were for Zudio and 8 were for Westside, taking the total fashion store counts up to 823. But also one thing to note is that there is a slowdown in stores opening because Zudio has actually opened just 16 stores this quarter versus their average of 40 stores for the last 8 quarters. Also, if you talk about the star business performance, then they added about 6 stores this quarter, with the revenues coming up with an uptick of about 29% year-on-year basis. Also, like-for-like growth now contributes to over 20%. Also, star business own brand revenue contribution, which was a key monitorable for the company, now contributes to over 70% of the total revenues.
That's the word on trend. That's one stock that just continues to trend higher. I mean, look at the performance and look at the valuation. That's been one dream stock. In fact, say Rudramurthy is also with us. Rudramurthy, is there anything on the charts that recommends a profit booking on this one, or this is the one that you just keep on holding and take a look at your portfolio and keep smiling?
See, for me, Trent is a stock for last 5 quarters. Every quarter it has given results good, and then short covering and fresh buying and stock moving up. And if you just observe for just last 1 year, this stock has gone up over 400 times. And let me tell you, this is an F&O stock also, not a mid cap or a small cap stock. So for me, yes, Trent has given a fabulous performance. Returns have been so good in Trent. So for me, this is a stock just to hold in your portfolio and keep riding the uptrend. But however, I'm not sure whether can you enter now even after a 10% up move and after a 400% kind of a move in last 1 year. But then still, if you have it in your portfolio, hold it. A fresh buying might be done on dips to levels closer to 5,800, 900 if you get there, or else just ride the trend whatever you have with.
Anti-gravity, that's the only one way to explain the way trend stocks as well as the earnings have been moving up. And to think of it, it's not too long ago the trend was just hovering around and breached that 5,000 mark, now 6,100 plus levels on Trent and still counting higher. We're going to take a very quick break on that note. When we come back, our chartists and fundamental experts will join in to analyze the market mood. Back with closing trades right here on ET. Now, let's just take stock of what the market is up to, holding out just so well. In fact, if we just bring up this week's Nifty chart, that will get you a better sense of how this week has been. Quite the volatile welcome to the month of August. There you go. It started off, sharply lower with that meltdown on Monday. And from there, we still haven't actually turned in the green for the week. Still lower by about 340 odd points or so. But today is a brand new day, so let me welcome on board Varun Goyal as well, Kunal Bothra, to talk about what they're making of the market right now. Varun, hi, afternoon. What is it that you've made of this complete U-turn that not just us but the global markets have taken from where we were on Monday to now? Anything that you've changed in terms of a portfolio allocation, or at least recommend doing that?
Good afternoon, Aisha. Thanks for having me on the show. I think if you look at the broader markets, there is no denying that the markets are trading 8 to 10% more expensive than the historical averages. If you look at the Nifty earnings for FY24, we are around 1,000 rupees. We assume 10 to 12% growth for FY25 and FY26. So if you take 1250 rupees as Nifty earnings for FY26, we are trading at almost 19 and a half times, 1 year forward earnings, and which is 8-10% more expensive than the historical 10-year averages of around 17 to 18 times. So I think broadly, if you look at it, markets are a little expensive, and therefore our preference continues to be present in sectors where there is more surety of earnings growth, whether it's banking, whether it's pharma, whether it's IT, and there's not much that we have changed in the portfolio. As we see the volatility play out in the last 1 week or so. So we continue to be invested in names where we believe there will be good earnings growth for the next 2 to 3 years.
Okay, so you continue to stay invested despite the volatility, but where are you putting the incremental money to work? Which areas, which segments still look okay on a risk-reward basis? Because we're staring at the likes of ABB and Trent, etc. today, wherein the earnings have been strong, but they're not cheap by any yardstick.
Pockets of market which are pretty expensive. I think if you look at the overall industrial and the capital goods space, we have seen some of the companies got massively re-rated in the last few years. We would be careful of sectors like defense and railways in the short to medium term. So while defense continues to be a long-term compounding opportunity, but I think the entry-level valuations can come down meaningfully going forward. I think broadly, if you see, we are seeing a healthy earnings growth trajectory as far as the pharma space is concerned. Both the domestic formulations and the CRAMS and API opportunity continues to do well. The US market is seeing better pricing, and therefore we remain positive on that. I think IT also, after the volatility of last 1 year, we believe the BFSI space in North America should do better, and gradually we should see both top line and EBITDA margins coming back. Chemicals is another sector that we believe is turning around after almost 2 years of severe price correction. And we believe that things both on volume and pricing front can get better at this point of time. So these are some of the spaces where we are putting incremental money to go.
Kunal, is today's move decisive enough to say that we're out of the woods, or do you think that come next week we could still see some amount of volatility?
I think we should see more amount of volatility. It's still not been one of the best days in terms of the sector patterns. Yes, the indices have done very well for themselves. We've seen a good 250 point plus recovery for the Nifty and almost 350 plus point recovery for the Bank Nifty. But we are still not out in terms of the resistances. So 24,500, which is the resistance we flagged off 3-4 days back, that still holds on. And even after this gap up move and I would say a bit of a strength from the overall market breadth, we are unable to surpass this resistance, which means that there is a strong amount of selling from the index futures at those higher levels. Even the options data has not changed quite dramatically, because generally when you near a resistance zone, and if the market texture becomes a lot more positive, we expect a change of behavior from the options data, where you see a lot of call writers changing stance and then moving on to put writing stance. We've not seen that change also happening for the index largely. So I think on the back of it, would probably expect the volatility to continue.
Expecting the volatility to continue, but one space which is outperforming today is auto. In fact, not just today, throughout the week, there have been those select names that have been doing well. In fact, let's pull up the weekly chart perhaps of Tata Motors. Every day since the launch of Curve, that one has been trending higher. Eicher Motor reported good set of numbers. Ola Electric, of course, the latest debutant on the street, is up 20%. Rudra, what is your sense on some of these incumbents, the likes of Tata Motors, Eicher Motors?
Tata Motors has support now at 1,000 rupees for short term, and yes, dips to those levels can be bought, and once it makes a break above those levels of 1,160, a fresh momentum can be seen in Tata Motor. And similarly, if I see the charts of Eicher Motor, again, this is a stock where we have seen some amount of correction which has already come in the counter, and now we are seeing sideways consolidation happening in Eicher Motor. So I would rather wait for some time before I enter into Eicher Motors at current level. Might be some more dip to levels closer to that 3% to 5% kind of a correction would be a good entry point. So Tata Motor is a buy at current level. HR after a 3 to 5% kind of a correction will be a good entry level. And I fully agree with Kunal. Let us wait for this break of 24,500 on Nifty and Bank Nifty at 51,000, and that might happen next week. Once we get that confirmation that yes, Nifty has closed decisively above 24,500 and Bank Nifty above 51,000, fresh long positions can be taken, but till then one has to remain cautious and play this volatility with care.
To be cautious, but Varun, I wanted to get a sense from you regarding some of these stock market ancillaries as well, exchanges, etc. MCX today is, of course, reacting to the news flow that there's a new leadership at top, so that ambiguity goes away. NSE reported that latest news flow of 10 crore registered investors, so that's no mean feat. And then obviously earnings came from the likes of NSE and BSE, and for BSE the total revenue jumped up by 149% year on year. The net profit attributable to shareholders was at 265 crore. EBITDA margin expanded to 47% versus 37%, and the total number of transactions for BSE Star MF has also jumped up by 72%. So a lot of these tailwinds for a lot of these stock market ancillaries, would you concur, and what's the best way to play that? Is it through the likes of KFIN, CDSL, etc., exchanges, or maybe some of the AMCs?
Yeah, I think the financialization of savings is going to be a medium to longer term theme. There is no doubt that there is a lot of earnings growth which can happen in this space, whether it's exchanges, whether it's depository participants, whether it's asset management companies. I think as more and more people invest in equity markets, debt markets, some of these intermediaries as well as the market participants will continue to get more business. So I think that is a medium to longer term trend, and we believe that the earnings growth in this space can be ahead of the general economy and the broader market, and as such we would be positive on this space.
Right, okay, that's the view coming in on how NSE and BSE and their numbers as well as the data points have, data metrics rather, have panned out. But one of the star performers from this week is clearly got to be ONGC. Kunal, I want you to come in on the charts. I mean, not just ONGC, look at a Cochin Shipyard. Of course, it's a reaction to its earnings. BHEL has been seeing some sporadic moves. I mean, time and again, the PSU stock theory is actually questioned, but no, they clearly, sort of defy all conjecture.
Well, yeah, I think specific PSU stocks are still finding favor in terms of market trend. So I think NTPC, I think yesterday or the day before had seen a good price action. Coal India had seen a similar kind of a price action. So yeah, I think ONGC out of the pack looks attractive even at current levels. 2 days back, if I'm not wrong, the stock had a sharp up move, 6%, 7% uptake. Yesterday was a bit of a subdued move, and today you saw the stock rising up by, I think, a couple of percentage points, at least in the first half. So that indicates that there is a strong follow-through up move, if not immediately, over the next couple of days for many of the PSU names. And this would also set in a point where many of these PSU majors, they could probably come back to their previous highs. I'm not sure about the the entire defense space as such, because there is still some evidence that these stocks are seeing drift on lower volumes, so which means that there is no major participation happening into these names, and that's why I think you see the likes of HAL, BEL, and many of these other names. They are showing signs of a sporadic up move, but then there is nothing meaningful in terms of volume data, which could probably attribute that maybe a bottom could be in place over here.
Okay, sporadic, but nothing structural at the moment. Varun, but do you believe there's a structural change as far as the consumption narrative is concerned? I mean, take a look at Lemon Tree today, down almost, down almost 17% for the week gone by. That is because it reported a weak set of numbers. While on the other hand, the likes of Dabur, Marico, etc., the rural-facing side of things are looking, even GCPL for that matter, looking much better. Would you do a bit of a sector churn there, move from urban discretionary to rural?
Well, I think broadly, if you look at the consumption space, the structural growth rates as far as the staples companies are concerned, will be more like high single digit. But if you look at some of the discretionary categories, be it consumer durables, be it alcoholic beverages, be it hospitality and entertainment, I think structurally from a next 3 to 5 year perspective, the growth rates can be higher, and as such, my preference would be to invest in some of those sectors and themes where you can get 12, 15, 17% kind of earnings growth. And I think staples is a space, despite a slight uptick in rural space, that kind of earnings growth might be difficult to come by. So my preference would remain on the discretionary consumption names.
Right, Varun, so good to have you on the show. We'll let you go on that note. We're going to take a very quick break, come right back, and we'll continue tracking markets, the last half an hour of trade this week.
Welcome back. Well, sustained momentum in the markets right now, and take a look at KFin Technologies. That stock is logged in upper circuit, 20% right now. Avanti Feeds is up 14%. Trent is doing quite well with that 11% gain. NBCC having a reaction to that order win. Affle, Godfrey Phillips, Ola Financials, these are some of the other names which are comfortably in the green right now. What's not doing well is Apollo Tyres. Honasa Consumers is also giving up a bit. Remember, that stock was up 10% yesterday. Today, the earnings are expected, and ahead of that, there's a bit of a profit booking which is happening on Honasa Consumers. We're also watching out for HPCL, down about 3% in the trading session, despite the fact that the likes of ONGC Oil India have had a massive run this week. But which are the other big price volume buzzers for the day? Ansh is joining us with that list.
So Trent will be the first stock in focus, as the stock has given a good breakout. Actually, it has surpassed its key pivot high of around that 5,900 level, along with good volume, actually strong volumes of over 7 times its average trading volume of last 20 session, indicating very strong participation in today's move. Apart from this, Eicher Motors will be in focus, as the stock has given a breakout from its 4-session consolidation pattern, indicating good potential reversal in trend on upside. The same pattern is seen in Oracle Financial as well, giving a breakout from that 4-session consolidation pattern, indicating same reversal in trend on upside. Lastly, if we talk about apart from this breakout stocks, there are high chances of Steel Authority, Biocon, Granules and Bandhan Bank getting into ban list for Monday. So keep an eye on the stocks.
Yeah, a bunch of stocks which are going to be in focus. And the Finance Minister, Nirmala Sitharaman, remember, introduced the Banking Law Amendment Bill in Lok Sabha, aiming to make significant changes to several key banking regulations. Prakash, my colleague, joins in with more details on the same.
Yes, an important development coming in as the Finance Minister has introduced the Banking Laws Amendment Bill 2024 in Lok Sabha, where various amendments are being proposed in the existing Act to improve governance standard and reporting by banks. Along with that, the proposed bill also seeks to ensure better protection for depositors and investors. The amendments include provisions for simultaneous and successive nomination by allowing up to 4 nominees in deposit accounts. As you are aware that the government is really concerned about rising unclaimed deposit in the bank accounts, which is at around rupees 78,000 crore by end of March 2024. Therefore, necessary amendments are being proposed. It also offers a greater flexibility for depositors and their legal heirs concerning deposits and safety lockers. The bill also seeks to amend existing act to enable the transfer of unclaimed dividends, share and interest or redemption of a bond to safeguard investors' interest. Along with that, the government is also proposing amendments in the existing act to extend the tenure of directors in cooperative banks to 10 years from existing 8 years. Last but not the least, the threshold for shareholding of a substantial interest will be increased to rupees 2 crore from existing 5 lakhs. So these are the necessary amendments which are being proposed by the government.
Okay, Prakash, thanks so much for that. Financials, of course, is something which continues to be in focus. Do remember that today Morgan Stanley wrote a note on IndusInd Bank and calling it a positive catalyst watch for the next 15 days. They're expecting the stock to outperform the benchmark index. But looking at some of the top gainers for the week gone by, KFin Technologies, of course, is top of the heap given the reaction today. Some of the other names include Cera Sanitary Ware, 17% up move in the week gone by. Triveni Turbine, BKG also moved up. BLS International also had a great week. Amongst all of these names, is there anything, Rudra, or within the entire broader market names, any specific ones that you're watching out for?
See, for me, the stocks which we just now saw have all moved up too much, and making a fresh entry right now may not be warranted. But however, if I have to pick few other stocks from mid-cap zone and where I can see value still at current market price, yes, PSUs in general definitely are expensive. But then there are very stock-specific themes in PSU one can look at. For example, look at NTPC, look at Coal India, look at even ONGC for that matter, Power Grid. These are stocks where still I see valuation comfort, but I will definitely avoid in general PSUs except these four names, whatever I told. And also stock like IEX looks very strong to me at levels around 190, 195. This is a very good zone to buy. AB Capital is another stock which looks very, very interesting to me at current market price. Manappuram is another stock which is good. So you have to be very choosy and stock specific at current market valuations, and you have to be in general low on your leverage, and also just be very cautious on the stocks what you select.
Really coming in there on the charts, but let's take it across now to the man of the moment, the new kid on the block, Ola, which debuted on the street today. Let's hear it out from Bhavish Agarwal as to what the path to profitability is like for the company as it makes its debut on D Street today with a very smart move and holding on to those gains.
We are on a mission to really create the EV future, the energy future of India, and we really want to make that future happen as fast as we can. It's a multi-decadal journey, and we want to have the support and partnership of the public markets in India. So we are very excited that people have reposed their faith in us, and prices will go up and down. I'm new to this, but we'll learn. Prices will go up and down, but fundamentally our effort will be on value creation for the country. Our focus is on profitable growth. We are looking to continue to improve our profitability, in a pun intended way, a sustainable business built sustainably. So that is our focus, and we want to continue on that. We have this big product launch event coming up on 15th August. It's our annual event, and we do it on India's Independence Day, because we want to share all the vision and all the products and all the technology that we work on.
Okay, so that's a word coming in from Ola and the management there. Take a look at Wockhardt because that stock has taken a bit of a spike since it reported its numbers. It looks like a decent set. Now, while the revenue is up only 15%, I think the fact that the net loss has narrowed quite substantially has the street excited. And in fact, during the entire quarter, whether it was Lupin, whether it was a lot of other companies, have reported better than expected numbers, and Lupin has been getting upgrades since its earnings as well. Rahul Shah also joins us on the show right now. Rahul, what's your view on the pharma? I think more or less the earnings have been impressive, but is there any specific name that comes out as a clear winner within the pack?
So I think if I look at the entire pharma as a basket, I think most of the numbers were in line with the street estimates, and I think no major disappointments in that prospective sector. So in that space, I think we've been bullish on Sun Pharma for quite some time, and I think in last quarter numbers, I think the guidance was a little bit, that narrowed down, and post that the stock had corrected. But I think still, what I believe is an entire play. If I have to look at an entire pharma pack, then I think Sun remains the top bets. So obviously, Sun will be my top of the priority in the Nifty universe as well. And I think followed by, I would also look at Lupin. The numbers were in line with what we were estimating. So I think post Sun, I think Lupin would be my preferred bet.
Okay, so post-Sun, Lupin will be the preferred bet, and yes, the numbers have been more or less good. In fact, Kunal, within pharma, what's your top bet right now? Will it be Lupin with that sustained momentum, or could it be these smaller names like of Wockhardt, etc.?
I think there are fresh breakouts which are emerging. Dr. Reddy is something which is looking attractive at 7,000 odd marks, so I think that's another name to look out for. DV Slab is something which I think at 4850 levels where it's trading right now could probably be the next candidate in terms of a breakout. The stock is looking attractive on the monthly time frame, and the short term charts the stock has corrected by I think by a margin of 150 odd points in the last 2 or 3 days. That makes the risk reward a lot more attractive for DV Slab at current levels. And from the mid cap end of the pharma pack, Glenmark Pharma and Zydus Life are the two stocks which I'd be very bullish on.
Okay, well, it's really been a day about not just the global market recovery, but lots of earnings as well. And KFin Tech definitely is one on our radar. which is bring up the stock price up for you as well. Locked in upper circuit about 20%. In fact, we spoke with the management, Srikanth Nadella, the MD and CEO, and he told us that he actually expects the MF share of the revenue to come in at about 55 to 60 odd % over the next 2 to 3 years.
In terms of the overall profile of the revenue mix that we have, mutual funds in India contribute about 65%. We expect in the next 24 to 36 months that skew moving towards anywhere between 55 to 60% to be taken by mutual funds, even as the other businesses tend to grow nearly twice as fast as the Indian markets for us.
Okay, let's just take stock of where the market is closing in for the week, and smartly higher, although we haven't quite made it in the green for the week. Guess the Monday damage and then the volatile last few days as well haven't really had a linear kind of recovery or aided that. 268 points up in the green, just skirting around the 24,400 mark for the Nifty futures. 271 points higher actually, as stand corrected right now. While of course Aisha, ONGC have been big movers. M&M as well held out by 2.5%. SBI, Tata Motors, Infosys, Reliance, TCS is the blue chips which have contributed to today's move, along with L&T as well. Not such a great day for a Kotak, for a Sun Pharma, BPCL and Britannia. They are the ones which kept sitting on the sidelines. But Rahul, what else is looking good in the market right now, even if tactically?
So I think two things. One is obviously all eyes on the private sector banks. I think HDFC, what we will see, maybe the MSCI flow, which everybody is waiting for it. So my sense is, I think that is one stock. Obviously, the results were also in line with what Speak was estimating. So I don't think so. That's a clear winner in last few days, and I feel that the risk versus reward is quite favorable in that stock. So I think HDFC is top of the mind. Second, I think if I look at it, various other names in PSU names as well. So in PSU banks looks very interesting. I think if I look at it, I think PSU banks have also underperformed in this last 2 months. So my sense, I think PSU banks again remains the top bets from my end. So I think these two. One as a sector, PSU banks and HDFC Bank in large caps is what we've been recommending.
PSU banks is definitely something that still looks very impressive to you. But what about autos and auto OEMs particularly? So whether it was in SGS this time or a Bharat Forge, all of these companies have also reported decent set of numbers. Would you be more tempted to look at the OEM side of things right now, Rahul, or would you still stick with either passenger vehicles, your two-wheelers, or even CV for that matter? Okay, we'll try and reconnect that line with Rahul for the moment, but overall, just taking stock of what was happening in the week gone by, and it does look like more or less, despite that entire turmoil that we saw in the week, remember Monday was the day that we reacted to that big crash that happened across the globe, that yen carry trade was expected to unwind, but we've pretty much made for lost ground. Kunal, yes, we are not as close to that mark of about 25,000 that we saw last week and that record high levels, but we have made pretty much halfway there. Do you think the bulk of the poison is out of the system now?
Not really. I still believe that there's a lot of resistance at play because, for every new trend.
Or can it dip below 24,000?
No, there's a lot of selling which is there in the markets. Okay. Now, the selling could be two front. Either it could be just about some risk aversion, where because of the last week or this week's volatility rather, traders are taking some profits out, sitting on light positions, or it could be preparation of maybe second round of a correction on the indices. I think that's very difficult to decipher because so far the bulls have not mustered the strength to scale past about those resistances, and I think that generally is a litmus test which we wait out for. So there are two gaps, for example, on the Nifty chart which have been created in the last 1 week of this correction. The first gap I think is around 24,800, 850. The second one is closer to 24,500 to 24,700 levels. So this gap has to be filled for the index to try and surpass the levels on the upside again and the optimism to come back again. Even in the previous many attempts when the markets had shown such kind of two consecutive gaps for itself, there was an immediate pullback for the index, and then we saw the index making a new high for itself. But this time around, there's a lot of resistance. There's a lot of selling across the larger cap names, and that's why I think it's acting as an impediment. So I think it's better to wait out for the breakout to happen rather than preempt any kind of a move here.
Okay, better not to preempt any move, but time to take the BDSC calls. Rudramurthy, what's the buy today, sell tomorrow, and tomorrow being Monday, thankfully?
Yeah, see, for me, ONGC is definitely showing strength, and after yesterday's small profit booking, that was an opportunity to re-enter into ONGC. So I am looking for a target of 340 on ONGC with a stop loss of 328 for a BTST trade, and also another buy on IEX. IEX also looks very strong to me. After that move towards 200, now it is consolidating and seeing some amount of profit booking, but then a fresh momentum buy will emerge again in IEX, looking for targets of 200 with a stop loss of 190 on IEX. So a buy on ONGC and IEX.
Surprise there, ONGC, the star performer this week. Kunal, what's on your list?
So I'll go with two mid-cap names. The first one is one Jubilant Ingrevia. That's a chart which is looking very attractive, trading at a multi-month high at levels of 700 plus. So I would suggest a target of 740, stop loss at 675. And the second would be about CDSL. That's a chart which is heading towards a 2-week consolidation breakout. So would suggest a target of 2700, stop loss could be kept at 2450.
Let's also track the important events which are lined up for the coming week. The big breather being it's going to be a truncated week. It's the week where we celebrate our independence. So 15th August is going to be a holiday. But other than that, we still have a lot of cues to deal with. It's going to be the last week of earnings season as such. So a lot of mid-cap and small-cap companies will come out with their earnings. The India CPI data will be out. IIP data will be out. So important to track from a macro perspective. Of course, from a Nifty, you have Hero Moto, Apollo Hospitals and Dalco. Across the globe, one would be watching out for that sit down that might happen. Trump might be speaking with Elon Musk come next week. So trust that from that one you'll get big headlines and talking points for sure. So definitely something that you need to have on your radar. So looks like it's going to be an eventful week for us going forward as well. And this week too was quite eventful with the kind of news flow that we had got. Rahul, if you're with us and could, okay, so Rahul is not with us at the moment, but overall the week has been okay, and as I pointed out, there are a lot of cues lined up in the coming week. But Rudramurthy, what's your sense for a couple of these numbers that we just got? InfoEdge, for instance, is reacting positively to its earnings. You also have names like, BLS International that were doing well in this entire week. Would you look at buying these, some of the names afresh? And what about Oil India? Because you talked about ONGC. Why not Oil India?
See, for me, first a word on InfoEdge. Naukri is just very, very strong when it comes to its chart patterns, and it is just clearly making that higher top, higher bottom formation. And after small consolidation, it gives a breakout and continues its up move. So yes, at current market price, I will buy InfoEdge, and one can look at targets of around 8,000 to come on Naukri, and looks very, very strong. However, if I have to see charts of Oil India, it was just a choice between ONGC and Oil India. But yes, Oil India is also another stock which can be definitely bought. ONGC is something which is available to me in futures to go long and take that leverage, whatever is available in F&O market. But yes, Oil India is also a stock which one can have in their portfolio. Very, very strong. Again, after a small consolidation, the stock just took that support at around 550 and then bounced back now to levels closer to the 640, 650 zone. So Oil India can also continue its up move towards levels closer to now 700, and it can further march towards 1,000 rupees over a period of time. So a buy on both ONGC as well as Oil India for me.
Okay. Let me now hand it over to Vinny then to find out how the closing trades have panned out this week and today.
So absolutely for the week, obviously starting a bit on that manic Monday front, but Nifty for the day at least closing up almost 1% in trade. For the week, yes, we'll close down almost 1%, but yes, not as bad as a fall as we saw at the beginning of the week for the overall day. 1% uptick, 24,367 levels is what the Nifty is at. Nifty Bank 0.6% of uptick there. Mid and small cap, that too is seeing a decent performance in line with the benchmark indices. Mid cap up 0.8%, small cap slight bit of an underperformance today versus the benchmark, but yes, 0.5% of uptick still coming in for the small cap as well. Advance decline ratio, like you can see, is in the favor of advances versus declines, keeping an eye on that. A lot of individual movers in trade today. So firstly, from the Nifty IT side, we're seeing good moves that have come in from something like an Infosys. Keep an eye out on that one. We had Wipro, TCS, all these also managing to hold on to gains. Even yesterday, we were keeping an eye out on that one. Let's move on and talk about some of the other sectors today. We have PSU banks that's buzzing in trade. So let's pull up an SBI that's managing to hold on to 2% of gains today. At the end of the day, SBI 2% gains, Bank of Baroda among other names, as well as Canara Bank also managing to hold on to decent gains. Let's also talk about auto. We have Eicher Motors that's leading the gains there as well. Eicher Motors 5% uptick coming in the auto pack. Good set of numbers came in from the company, keeping the stock a buzz today and has been buzzing all through the day. Other than that, we have M&M, which is holding on to gains, Tata Motors, Hero Motocorp. So yes, Nifty Auto also among the top sectoral gainers that we're seeing coming in for the day. Let's move on and also talk about some of the individual movers today. We have Trent. Strong up move, record high levels for Trent after very strong numbers came in from the company. Let's pull up Cochin Shipyard. That was one of those movers on the back of earnings. Keeping an eye out on that. Bit of weakness that we saw coming in Gujarat Gas as well as in terms of Apollo Tyres. There was some bit of a pressure there. SAIL also under pressure today among the top F&O losers that we saw, and that was only mainly because of the numbers that came in was quite weak. Let's move on, and from the mid-cap world we have Oracle Financial Services that's managing to hold on to gains, Lodha Macrotech, Suzlon as well as some of the gainers. While in terms of the losers, we do have RBNL, other names HPCL as well as Balkrishna Industries, which are quite under pressure today. Overall for the week, the mid-cap Nifty mid-cap will be snapping its 2-week gaining streak, and among that LIC Housing, RBNL among the top losers. Small cap also declining for the second consecutive week, while Nifty declines for the second consecutive week as well. Grasim, Ultratech Cement for the week are among the top losers. But for the day today, 24,364 is where the Nifty is closing at.